get an investor to explain how he is looking at the recent fall and the situation here on. Sandeep Sabarwal of Prabhudas Lilladher joins us. Hi Sandeep, what is the sense you're getting of the markets? It's a breather, you will brace yourself for more falls?
Good afternoon, Lata. So I think we've had a significant sell-off which has been led largely by global events. And I think that was the biggest risk for emerging markets, that developed markets have been moving up and emerging markets were underperforming. So a fall would always lead to a continued fall in emerging markets, and that's something which we have seen today. However, I think all said, I think specifically looking from the Indian context, I think macros have, I think the worst of the macros are behind us now. If we see gold prices, they are down 25% from the beginning of this year. We've seen crude being subdued given Chinese concerns and a lot of consumption concerns globally. And given the dynamics of the crude market combined with the fact that we have a moderate leadership in Iran now, we could see the geopolitical risk reduce, which could be positive. Okay. And the monsoons have been normal and are continuing to be strong all over the country. So I think taking all the macro aspects into account as well as what's happened in the recent past, I would believe that the downside risk from the current levels should be limited. But I think the upside also doesn't seem to be very huge, given the fact that on the ground activity in the economy still remains subdued. And to that extent, we could see the market bottom, move up, and then remain in a range till we get some more clarity on the direction in which the economy is going.
So Sandeep, how does one generate alpha or returns when the market is moving in a trading range? Which stocks would you bet on to generate that extra money?
The market becomes very tough in this kind of scenario because typically whatever is the logic, and if you typically going by the logic, whatever stocks get bought in terms of what might look cheap, given the fact that maybe inflation is peaking out, maybe the growth recovery should happen going forward. But that really doesn't happen. So I think largely what we've seen is that defensives have continued to outperform despite the fact that the valuation differential between defensives and the rest of the market has kept on increasing. So I think at some point of time it obviously does reverse, but at what point of time it's very difficult. So I think alpha generation would just depend on, I think frankly alpha generation at this point largely depends on the cash positions you take rather than what stock you are buying at this point of time.
Okay, how have you tackled the rupee depreciation and its impact on your stock picking? Because of the higher value of dollar, some products will get a natural protection from imports. Exporters should logically do well, and those with dollar debt will look worse. How are your buys or sells influenced by this 10% depreciation?
I think that clearly the two sectors which benefit out of the rupee fall are technology and pharmaceuticals, because most of the large pharma companies today get a majority of their earnings from exports.
No, Sandeep, Sandeep, just a little beyond these standard winners. I mean, if you take a look at valuations as well, can you give us an idea of which stocks you may have added as buys or deleted from your buy list?
So I think from in terms of deletion, I think the deletion has not happened in a big way, because I think the stocks which you are looking to buy into, I think those have remained largely the same. I think what has actually happened is that for some companies which have a greater overseas operations, this could add to earnings. So on the mid-cap side, we have exposure, among the larger exposures is United Phosphorus. So they have a large global presence. So I think on translation basis, they could benefit out of whatever the currency movements have had. So they could be a beneficiary. Then there are other companies like on the consumer goods side, or maybe the tire industry. All these companies do benefit due to the protection which happens, or even any product which can get imported. Those companies do benefit. But what we've also seen is that there's been a demand slowdown. So then it's a mix of both of them. So what stocks you end up buying. So I think it's a tough call. I think a few companies are obviously there which benefit, but I think a large number of them, because of their balance sheet risk, don't benefit so much.
Sandeep, Ranbaxy has almost come to the 300 mark. It's at 313 in today's trade from levels of 500 in a span of about maybe 2 odd months. At what point would you perhaps start considering Ranbaxy as attractive?
I think what's happened here is that Ranbaxy turned into a stock where I think most investors, including us, have typically avoided the stock. In fact, I haven't even followed the company for some time. Because I think what's been coming out of the company in terms of what the management says and what actually comes out later, there's a huge differential between the two. So I think it's better to avoid this stock at any given price at this point of time till more clarity comes, and focus on the companies which are actually doing well.
Okay. What are your top buys at this juncture?
In terms of the portfolio, we have, I think, the top 3-4 holdings in terms of the large caps are ICICI Bank, then we have Mahindra and Mahindra. We are looking at Tata Motors at this point of time, but we don't hold that. In terms of mid caps, our exposure is in companies like Mahindra and Mahindra Financials.
Okay.
We've got United Phosphorus, and we are looking at some stocks which have got better recently to add into that.
You spoke about considering Tata Motors. Would you be concerned because of the slowdown in China and therefore what impact JLR sales to China will have and therefore on Tata Motors? At what price would you start, perhaps recommending a buy on Tata Motors?
I think the company, because of these concerns, we've already seen a correction in the stock price. Now, the impact in China is something which we have to see how it plays out, because my personal view is whatever is happening in China is largely to control macroeconomic risks rather than create a huge downside for economic growth out there. So I think we will have to see how the data plays out. But I think Tata Motors has benefited due to the weakness of the British pound in over the last 4-5 months. So I think, and that should continue going forward. Although in recent times the pound has bounced back. So I think. So I think considering all that into account, I would say that around current level should be good levels for Tata Motors.
Have you been looking at a small bank like DCB? It's been actually one of the relative outperformers. Do you see this as a future Indus End?
I really don't think so. I think in terms of my investment strategy in banks, I think it's largely been restricted to the larger banks. You get into those banks when you think the financials should outperform and get out when you think they shouldn't. And I've largely avoided some of the mid-cap banks.
No, some of the early chart moves do look like how UTI Bank used to look when PJ Nayak first took over. The dramatic and steady improvement we saw in the chart. But I mean, I agree these analogies don't work. Thanks a lot, Sanjeev Sabarwal, for joining us with your